So today we're going to be talking about 10 ways to get your offer accepted in a competitive housing market. Who this guide is for really any buyer that's going to be facing any competition while they're searching for homes or bidding on any houses. So what you'll learn from this guide is how sellers actually choose offers over other offers. And then you'll learn terms that matter more over other terms inside the actual offer. The first step in the offer process is getting fully pre-approved. So any seller is not really going to take you seriously unless you have a pre-approval. But that goes really without saying because in order to submit an offer, if you're using financing, you will need a pre-approval. Otherwise, you're going to be using a cash offer, and that requires proof of funds. You're going to want to know your true budget because obviously going into buying a home, you're going to want to know your max price because you're going to want to avoid emotional bidding because in offer scenarios where there is back and forth bidding, sometimes things can get emotional. And so having clear boundaries lets you negotiate with confidence and lets you really walk away when you hit your max price. One of the fastest things that determines, whether sellers choose an offer over another offer is really speed and responsiveness from your agent. So I would really make sure that your agent is communicating not only with you, but with the listing agent about your offer. The other thing about your offer is simplicity. The less contingencies involved in your offer, the better. So offers that are very complex and have home sale contingencies and all this other stuff written into them typically are harder to get through and are more risky for the seller. And so they tend to choose those less. And so a cleaner offer with less contingencies and is a little more straightforward is typically better for the seller. And so they tend to choose those over more how do I say this, more difficult offers that have more contingencies involved. The other thing is a stronger deposit up front also conveys more seriousness. So an offer that typically has a higher than average deposit amount that is competing among other offers looks better. So I would also keep that in mind when writing an offer, knowing that another person might be writing an offer against you. So keep that in mind. Another thing that is a huge factor is being flexible on closing date. So keep in mind that when you are buying a home from a seller, they also need to find another home. So being flexible on when you can close is also really good for your chances on getting the seller's home because, like I said, keep in mind, they also need to search for another place to live as well. So if you can be flexible, I'm sure that will work in your favor for the seller in getting you their house. The other thing to do is also make sure that your agent is good in negotiation tactics. Also, limit repair requests when going into repair negotiations, just because the more repair requests that you ask for, sometimes it can be looked at as being called nickel and diming. Basically, asking for like little paint chips to be corrected or things that really can be looked at as minor, fixes. um, you know, Basically, sellers strongly prefer buyers that don't create endless negotiations after the offer is accepted. And so most of the time, when offers fall apart before settlement, it typically happens during the repair negotiation phase or after the repair addendum is submitted. The other thing that you can do to increase the chance that your offer is accepted is to put in an escalation clause. And basically, an escalation clause is typically where you set a predetermined range that your offer is going to increase up to a certain max price in certain increments. So basically, if I were to put in an offer and say, okay, I'll bid on this house up to $500,000 in increments of $2,000. So I might say, okay, I'll start at 480 and you can raise my offer by $2,000 automatically if another offer comes in above that, all the way up to $500,000. But once an offer comes in above $500,000, that's my max price and I won't go above that. The reason they use escalation clauses is so that there's not an endless back and forth, and so that the agent doesn't always has to call the client, and that the other agents don't always have to go back and forth and say, hey, I just got another offer, can we increase your offer? And so that's a good way to also, make sure that your offer gets accepted. The other thing to understand is an appraisal risk and understand how appraisals work. Banks require homes to appraise at or above the purchase price. So understanding this process definitely helps to make informed offers in competitive situations. In hot markets, you should maybe be prepared to cover the gap if the appraisal comes in below, because the only options you really have if it does come in below value is the buyer either has to bring additional cash to the closing table or the seller has to reduce the price. And so, really, the seller doesn't want to reduce the price, and I'm sure the buyer doesn't want to bring additional cash to the closing table. And so, typically, if an appraisal does come in low, it's not really a good situation. And so, you really want to avoid that. To keep deals from falling apart, you want to address appraisal concerns up front to prevent your deal from collapsing, weeks into the process and wasting everyone's time. Um, the other thing is, work with someone locally. Typically, local agents, know the area better than non-local agents. The other thing is, local lenders as well, the area and also local rates and, local prices better than non-local lenders. And so, I'd always prefer that, people work with local lenders than non-local lenders and nationwide lenders and things like that. If this video helped, feel free to let me know and, leave a comment and follow and, stay tuned for the next video.